What if I told you that choosing the wrong market could cost you years of time, thousands of dollars, and a lot of unnecessary...
Every day, millions of beginners ask the same question. Should I invest in stocks?
Should I buy crypto? Or should I learn Forex trading? Social media makes all three look like easy ways to get rich. You'll see people posting luxury cars, expensive vacations, and screenshots of massive profits. But here's what they rarely show you: the losses, the failed trades, and the years it took to learn. So before you put your money into any market, you need to understand how each one actually works. By the end of this video, you'll know which market is best for beginners, which one carries the highest risk, and where you should focus first if your goal is building long-term wealth. Let's start with stocks. When you buy a stock, you're buying a small piece of a real company. That company could be building smartphones, selling coffee, creating software, or manufacturing electric vehicles. As those businesses grow over time, your investment has the potential to grow too. Many companies also pay dividends, which means they share part of their profits with investors. One of the biggest advantages of the stock market is that it's backed by real businesses producing real products and services. Historically, broad stock market indexes have rewarded patient, long-term investors over many decades, although past performance never guarantees future results. That's why many financial experts suggest that beginners start by learning about diversified investing, rather than trying to pick individual winning stocks. Now let's talk about crypto. Cryptocurrency is completely different. Unlike stocks, most cryptocurrencies don't represent ownership in a company.
Instead, they are digital assets built on blockchain technology.
Crypto has created incredible opportunities.
Some early investors made life-changing returns. But crypto is also extremely volatile. It's not unusual to see prices move dramatically in a single day. That means you can make money quickly, but you can also lose money just as quickly. For beginners, this emotional roller coaster can lead to poor decisions like panic selling or buying into hype. If you're interested in crypto, it's important to first understand blockchain, wallets, security, and risk management before investing real money. Now let's move on to Forex. Forex stands for foreign exchange. Instead of buying companies or digital assets, you're trading one currency against another. For example, the US dollar against the euro, or the British pound against the Japanese yen. The Forex market is the largest financial market in the world, with enormous daily trading volume. Because of that, prices can move constantly throughout the day. Many Forex brokers also offer leverage. Leverage allows traders to control larger positions with a smaller amount of money. While this can increase potential profits, it also increases potential losses. That's why Forex trading requires strong discipline, risk management, and a solid understanding of market behavior.
Unfortunately, many beginners underestimate these risks. So here's the big question.
If you're completely new to investing, which market should you learn first?
The answer depends on your goal.
If your goal is long-term wealth, the stock market is often the best place to begin because it encourages patience, diversification, and consistent investing rather than constant trading. But before we compare all three side by side, there's something important you need to understand, and it changes everything. So, let's compare all three markets side by side. If you're looking for long-term wealth, stocks have a strong track record of rewarding patient investors over time. While the market experiences ups and downs, many people build wealth by investing consistently and holding diversified investments for years. Crypto offers the potential for high returns, but it also comes with much higher volatility.
Prices can rise quickly, but they can also fall just as fast.
If you choose to invest in crypto, only invest money you can afford to lose, and make sure you understand the technology before getting started. Forex is different from both stocks and crypto because it's primarily a trading market rather than a long-term investing market. Success often requires technical analysis, strict discipline, risk management. Many beginners underestimate how difficult consistent trading can be.
Now imagine three beginners.
The first person spends years trying to predict every market move.
The second jumps from one trending cryptocurrency to another. The third invests consistently in diversified assets, keeps learning, and stays patient.
5 years later, who is more likely to have built lasting wealth?
In many cases, it's the third person, not because they found a secret strategy, but because they followed a simple plan and stayed consistent. That's one of the biggest lessons in personal finance.
Consistency usually beats excitement.
Another important point is education.
Before you invest your first dollar, invest in your knowledge.
Learn how markets work. Understand risk.
Know the difference between investing and trading.
Study basic financial concepts like diversification, compound growth, and asset allocation. The more you understand, the more confident your decisions become. Here's a simple learning path for beginners. Start with the stock market to understand long-term investing. Then learn the basics of cryptocurrency if you're interested in digital assets and blockchain technology. Finally, explore Forex only after you have a solid understanding of risk management and market psychology. Remember, you don't have to master everything at once.
The goal isn't to chase every opportunity.
The goal is to build financial knowledge step by step.
And here's one final thought.
The biggest investment you can ever make isn't in stocks, crypto, or Forex. It's in yourself.
The skills you learn, the habits you build, and the patience you develop will often have a greater impact on your financial future than trying to find the next hot investment.
So, what should you learn first? If you're a complete beginner, start with the fundamentals of the stock market. Build a strong foundation, stay diversified, think long-term, and avoid making emotional decisions. Once you're comfortable, you can explore other markets with a better understanding of both the opportunities and the risks.
If you found this video helpful, be sure to like the video, subscribe to the channel, and turn on notifications for more simple, practical finance content every week.
I'd also love to hear from you.
Which market are you most interested in? Stocks, crypto, or Forex? Leave your answer in the comments below. Thanks for watching. Keep learning.
Keep investing.
And I'll see you in the next video.